Tata Motors and Maruti. Let's just get a quick roundup of what brokerages are saying. Numbers were out. Puneet is tracking, of course, both companies. Let's start with Tata Motors, Puneet.
Yes, thanks for that. So Tata Motors, I would say it's a miss across all fronts for the company this particular quarter. And the downside is that they've cut the guidance for JLR, and I think that won't be taken very positively by the market. Now, they mentioned, but there is one positive thing in the guidance cut, that the EBIT guidance of 8.5% has been maintained. So they've cut revenue guidance to £29 billion versus £30 billion earlier, and that will impact the ROCE as well in this particular year of FY25. That's been cut to 20% versus 22%. Apart from that, they also had a positive impact on EBITDA margins for the passenger vehicle space in fact of the PLI, 150 basis point. But despite that, the margins have fallen, so another key negative. And brokerages have, cut their target price accordingly as well, because of the guidance cut mainly. So when you see Morgan Stanley, they maintain while in equal weight, but they've cut the target price to 853 from 920 rupees earlier, and they mentioned that while the guidance cut and they maintain the EBIT margin, as I mentioned, and they will relook at the FY26 guidance as well, because there they mentioned that EBIT will go to 10%. Also, one of the key aspects is that, to meet the FY25 guidance, they expect a very strong Q4 again. And, that's going to be one of the key things to watch out for, because they're saying they'll do more than 10.5% of EBIT margin in Q4, and that might be something to watch out for. Goldman Sachs, they've also cut their target price to 800 from 830 earlier, and they've said that the JLR China market has fallen by roughly 27%, which is the locally produced market in this particular time frame, and they're also expecting a very modest volume growth of just 2% CAGR over the next 2 years. And finally, on Nuvama, they've cut it to 720 from 750 earlier, and one of the key things in the report is that, because of the guidance cut, the earnings have been cut for the next 2 years by 4% each on the revenue as well as on the EBITDA side, and they're expecting a muted performance of just 1% CAGR for the next 2 years in the India CV division as well. So overall, target price cut across brokerages on Tata Motors, and I think stock might react negatively in that aspect.
Puneet, just very quickly, 30-second answer. Because the guidance for Q4 is not that bad, can the stock bottom out after a gap down?
Well, it could potentially need us, because that EBIT margin guidance has been maintained at 8.5%. But as I mentioned, they'll have to do more than 10% EBIT margins in Q4 at 10.5% to maintain the FY25 guidance of 8.5%. And that seems very difficult in the current market, especially since no recovery in China is visible, because they've had dealerships which have had some cash crunch in this particular quarter as well. So something definitely to watch out for in Q4, specifically on the EBIT margin part.
Got it. Okay, just hang on, Puneet, because let's hear out the group CFO, right, P. Balaji, who announced a gradual improvement in demand likely in the fourth quarter. Exactly the point that we were talking about. Listen into that.
We do believe the growth impetus from infrastructure investments will continue to feed into it. Buses are doing well. So I think there is enough and more ammunition available for us to drive growth. And with a little bit of support from the macro factors, I think we should be able to get this back again. As I said earlier, Q4 in normal course is a seasonally strong quarter that should help build momentum. And we should ensure that we continue to build that momentum into Q1 and beyond. Currently, we'll need to wait for clarity to emerge on that. And as far as UK is concerned, I think UK balance of payment vis-a-vis the US is actually the other way around. Actually, US exports more to the UK than the other way around. And therefore, we'll need to watch and see how that plays out. There's nothing concrete at this point in time. And in any case, we will have to continue to ensure that we drive all the levers that we have, both on the demand side and the cost side, to navigate whatever comes our way. You also have to keep in mind what happens to the currency in all this, and the fact that our cost are in pound sterling. Any depreciating pound will also help us in this journey. So let's watch rather than getting ahead of ourselves in terms of what's going to be.